Hello, I'm Michael Pascoe. It's Monday, October 31, the start of an especially big week for the banks, specifically the Reserve, Westpac and ANZ, but also the end of the Australian stock market's best month since March 1988. We do indeed live in amazing times, and that's without considering Qantas, but I suppose we have to. The big thing about the Qantas grounding actually isn't Qantas, unless you happen to be one of the many thousands having their travel stuffed around, or have a lot of Qantas shares, or if you're an employee, or if you're Alan Joyce. After decades of decline, key unions are on the way back, helped considerably by the government's Fair Work legislation. Secondary boycotts and pattern bargaining are no longer animals of the past as the extent of the legislation is tested. And so we're likely to see more of it. When profits as a percentage of GDP remain near record highs and the Dumbo boards continue to vastly overpay their CEO mates, we shouldn't be surprised that the more powerful unions will flex the greater power afforded them. And that's before considering what's likely in the more bolshy CFMEU states, as the building industry's own industrial watchdog is scrapped. It's already had its canine teeth pulled. There are a vast number of awards coming due in the months ahead. You've been warned. Meanwhile, back at those Dumbo boards, they really don't get it. The front page of the weekend Australian Financial Review carried the photos of 5 boardroom blue bloods and James Packer, all pouring varying degrees of scorn on their revolting shareholders. Really, corporate Australia would be so much nicer if those common little shareholders weren't allowed to have opinions, or at least if they kept them to themselves. The arrogance, hubris and plain contempt on show is simply appalling. But the funny thing is, the Directors' Club thinks the complaining shareholders are the ones who really don't get it. The hoi polloi simply don't understand how an ASX 100 board operates. There is a serious disconnect here between the boardrooms at the big end of town and ordinary Australians. The boards generally can't comprehend that they're responsible for an obscene blowout in executive remuneration, that our society, their employees, their customers, their shareholders, are jack of it, and that their remuneration committee's excuses simply don't hold water, let alone multi-million-dollar pay packets. The attitude of the Directors' Club is understandable. They don't want to consider that they've been incompetent, that they've stuffed up, that the American model of competitive overcompensation is simply wrong. It's rather sad, really, and we're all paying for it. Meanwhile, just about all that can be said about tomorrow's Reserve Bank board meeting has been said. For the record, I reckon last week's amazingly low underlying inflation rate means it will be very hard for the RBA not to cut rates by 25 points. But this is not the rate cut that Westpac's Bill Evans bravely predicted. And I'm not expecting any further cuts. Beyond tomorrow's effort, I'm betting on rates staying steady for a good many months, after which the next movement is more likely to be up than down. And that's because I'm optimistic about the Australian economy and our key trading partners. We'll know much more about the RBA's thinking without having to wait a fortnight for the board minutes, because on Friday it releases its quarterly statement on monetary policy, all the forecasting that's fit to print. On Wednesday, the bank spotlight moves to Westpac for its annual results announcement, followed by the ANZ on Thursday. Both will follow NAB's trend of a nicely higher profit. Westpac's expected to report more of it, $6.5 billion or so, but ANZ should have the higher growth rate while coming in with a little less than $6 billion. Hey, what's $500 million or so between bankers? And if the Europeans can keep the confidence restoration on track, all our bank share prices should continue to enjoy a relief rally, a nice way to start a new month. Elsewhere in this busy week, we have September's retail trade figures being released on Thursday, the day after September building approvals. For market sentiment, though, the big figure is likely to be US payrolls on Friday night. The string of not too bad statistics in the US has built up ahead of optimism about job creation there. Whether it's justified is yet to be proven. And then there's the mystery of the games China is playing with iron ore prices. Nothing is ever quite what it seems when it comes to such coordinated action. Just another little saga to unroll. Talk to you Friday.